Chris, I appreciate being here. Nice to see everyone. This is the first in-person event I've done in a long time, so it's sort of, there's lots of pent-up demand to be doing these things in person, so it's great to be here. My name is Mark Kolb. I'm a partner with the Tech Council Ventures. Tech Council Ventures is a New Jersey-based early-stage investor. We're pretty technology agnostic, but we've got certain investment themes like clean tech, investment themes like healthcare, enterprise software. I'm an entrepreneur turned venture capitalist. I ran several businesses, early stage businesses in the pharma IT, healthcare IT, and medical device space. And I partnered up with Jim Gunton and Steve Sokoloff a couple of years ago to move to the investing side of the table.
Joanne, how about a little bit about yourself and NVP's mission?
And just check that this is working. Okay, great. Good morning, everybody. It's nice to see everyone, and it's really good to be here in person and not via a Zoom screen to look at a bunch of floating heads. So my name is Joan Lynn. I'm a principal at Newark Venture Partners. We're also an early stage, really seed stage focused venture fund in investing in B2B software. We're investing out of our second fund. We have about 130 million in assets under management, and started in 2016 with several Newark-based and Newark regional corporate LPs. You just heard from Ian at Audible. Don Katz was actually one of the, we call him our founders. He thought of starting Newark Venture Partners in 2016 as a way to elevate Newark within the broader tech ecosystem and the national tech ecosystem. And so we've been investing in early stage technology companies since then across a number of industries. I happen to focus a lot on healthcare, but we invest in fintech, insurtech, audio and new media, enterprise software, a bunch of different areas. So very exciting.
So today we're talking about ESG, and in 2020, I think the funds under management were 236 billion. 2021, it was 357 billion. So quite a large increase. And we see ESG in small and large companies now as part of the mission. How do you see that translating into what you invest in for startups?
Yeah, so while Newark Venture Partners isn't a impact, we don't define ourselves as a social impact fund. I believe that fundamentally as an early stage technology investor, anything that we invest in will ultimately have a larger impact on society in a lot of different ways, whether it's fintech companies, healthcare companies. We're investing in a lot in supply chain, and that ultimately has a broader impact on environmental issues. And so I think anything that we do is fundamentally going to be a positive impact for ESG type areas. And I'm seeing a lot of that happening within healthcare, for example. About $30 billion went into healthcare venture investments in 2021. And anything that we're investing in the healthcare space is going to ultimately have positive impacts for populations across the globe, across the country. We're excited by that.
Mark, what about you? How does...
Don't fall off the stage.
That would have been good.
Yeah. Don't bite.
That would have been a mic drop. Mark, what about you? How does Tech Council Ventures use?
I think very, very much the same as Joanne said. We are not an impact fund, but if you look at some of the areas we focus in, like clean tech, like the environment, we are certainly having some impact in that space. One of our investments, for example, is a company called Kintra Fibers, and they are developing a biochemistry to replace polyester and nylon into textiles. So you can see that that's got falls under the E of ESG. The other thing is, as a fund, while we're not an ESG or an impact fund, we do build that right into our fund process. We report to our to our advisory board on a yearly basis the progress we've made on ESG. So that's built into our processes. And for example, and on the social side of that, I know that the last time we reported, we said that about 1/3 of our portfolio companies had ethnically diverse female CEOs. And so that sort of sits to the social side of that. In fact, that number would be larger if we counted co-founders and C-level executives. So I think, the point is you don't have to be an impact fund to have some influence and to really have make some benefit on that ESG side.
Yeah, I think that's right. To have a double bottom line can mean a lot of things. Ultimately, if your fund is primarily a returns-driven fund, those things are not mutually exclusive. And so I think there's a lot of opportunity out there investing in companies that do well by doing good. And we're excited by that. And, diversity is a big part of Newer Venture Partners' portfolio as well.
Joan,
I'm sorry. Well, so you started off by quoting the numbers and the growth that we've seen in ESG investing. So let's look at what's happened. The individual investor over the last 10 years, they've had lots of increased interest in ESG. So what that's done is that's forced or that's obliged impact funds to grow. So we've seen lots of growth in these funds, and not just, impact. When I say impact fund, that's anything from the $5 or $10 million local VC fund to the Bain Capital's multi-billion-dollar double impact fund, right up to the Gates Foundation. So you've got this broad range of impact funds, and if you look at the PitchBook data, you find out that the percentage-wise, the greatest growth has been in the early stage venture capital. So what does that mean to these investors? It means that there's lots more investors. Well, if you take the investor, speaking of ESG, if you take the entrepreneur who's going to then go ahead and try and create a business in that speaks to environmental and social matters, there's lots more money. There's more investors. There's more money. There's more support systems. There's support systems like what we're doing here at Tech United and what we're doing with the BetterX program. So it's a lot to help these entrepreneurs.
Mark, Joanne, I have a question for both of you. Not traditional social impact funds, but if you had two shoe companies, for example, and one was Tom's that does have a mission at the end of the day, and they were similar financials and get a similar return out of them, would that company with that mission drive you towards them a little bit more? And do you feel like that's...
You know what? If you take a scale and everything else is equal, that's the tip. That's the finger on the scale that pushes it over to making that investment, right?
All right. Well, let me go one step further. What if that scale wasn't quite equal? What if there was a little bit of a better return on that one because they're not sending a free pair of shoes to a third world country for everyone they make? Would that drive you at this point a little bit differently?
So I think a little bit to what Mark was alluding to. There's a lot more kind of downward pressure from limited partners, fund managers, and in a positive way, right? And so I do think that there's a lot of reason why if you had that option, there could be benefits outside of just the pure financial return of going with a Tom's or more mission-oriented company. When I think about, not whether or not the scale is tipped the other way or not, from a consumer perspective, and I think a lot of the decision making that we're looking at is also ultimately you have an end user, and the consumer today is much more ESG oriented in their everyday decisions. And so even if you're thinking about a consumer CPG products company, I think there's probably higher growth potential for that mission-oriented company. And, down the line, I think ultimately as a venture investor, an early stage venture investor, you have to have that lens when you're thinking about it.
I totally agree. I even buy my wine because they're a mission-driven, sustainable company, and it makes it easier for me. What about an example of an investment that hits the tagline "doing well by doing good" that you've recently made? Can you give a good example of one?
Sure, I'd like to. This is a company called Behavior Flow, and I haven't invested it yet, but I'm working with them. This is a company focused on autism, specifically autism education. And we've got a young New Jersey-based entrepreneur who spent 10 years teaching autistic children. And he says this is some of the most fulfilling and gratifying work you can possibly do. But he says it is also incredibly difficult, and the burnout from these teachers is very difficult. So after 10 years of teaching, he decided to form a company, and he's building software to help the education process for autistic children. And I just love the mission. I love the guy. I love what he's trying to accomplish. And we're looking for angel money for that right now. So if that piques an interest with anybody here today, I want you to tap me on the shoulder before the day's out. I have a second example, but I'm going to let Joanne go.
Yeah. No, but so I think one of the more recent healthcare investments that we've made is into a company called Pair Team. And I'm particularly excited about this one because it's focused on providing a tech-enabled technology solution and remote care solution for Medicaid clinics. So both of the founders actually started as early employees at Forward. And so if you've seen the ads on your social media for Forward, totally tech-enabled primary care. And we've seen a lot of innovation in the healthcare sector for sort of wellness and premium level care where you have to pay, extra for the latest innovations. And we really wanted to take a similar model where they're automating away a lot of the administrative overhead burden in a primary care clinic and take that to, the Medicaid clinics that serve a large portion of the U.S. population where it's needed most. And so we're really excited by what they're doing. Medicaid is one of the largest national, programs, the largest group spend within the healthcare budget. And so I think it's a massive opportunity. We're excited about both the potential return for this company, but also the impact that it has.
Well, more of an abstract question. What is your hope for how technology will help build a better future for all?
Ultimately, I feel like there's the opportunities are limitless, right? I think being here within the business school at NJCU, like seeing all the possibilities, seeing that next generation of great minds thinking through problems that they're facing today, thinking through problems that are going to emerge over the next 50, 100 years. I'm more and more bullish that what we do on a day-to-day basis, investing in these early stage ideas, are going to have huge impacts on our generation, our future generations, my kids' generation. So I'm very excited by that, and the amount of dollars that you mentioned at the beginning of our session, diving into and investing into these areas is a huge driver of that. So very excited.
I couldn't agree more. It's just this, with the changes in technology, with the capital that's available, with the attitudes that we're seeing coming out of people, and certainly the diversity and equity attitudes, I just think we're going to see great things going forward. We're just making it, I don't want to say it's necessarily easier for these entrepreneurs, but there's just so much more for them to be doing. We're going to see great things, Chris.
Mark, I have a question. So a few years ago when you, Steve, and Jim were sitting in a room, was ESG a word that was thrown, or a term that was thrown out often, or it's not a bad thing if it wasn't, but it's a good thing that you see it so often now. But how have you seen that change from even how you talk internally about investments?
Well, it's a good question. It's a great question, Chris. Thank you. So no, I can't say that it was actually something that was top of mind at the time. And although it's built into our fund documents that we do report on it on an annual basis, but I wouldn't say it was top of mind. It certainly has become much more so as we've gone forward.
What would you like? There's social impact funds get an advantage when you're investing in the ESG just because they're tied to the mission. But what would you like people to know about Tech Council Ventures or MVP? That how can you help these types of companies and maybe ways these social impact funds can't?
So, I think social impact funds have, very clear mandates and criteria for the types of returns that they're looking for. They bring a different set of skill sets as well. With Newark Venture Partners, I think, and Tech Council Ventures as well, you get the best of both worlds. You have operators and investors that can help scale the business, are really focused on the right type of growth for the company or channels and options for that growth. I think with Newark Venture Partners specifically, we have these amazing corporate partners. On the healthcare side, RWJ Barnabas, Horizon Blue Cross Blue Shield of New Jersey. Like those types of relationships really are incredibly valuable for these early stage companies that don't have the means, the access, the network to open up some of these doors that we can potentially support them with. So I think that, every fund has a little bit of an edge. And I think having both a traditional finance lens as well as a sort of double bottom line and mission oriented fund is a much greater value add.
Yeah, exactly. And I'd say pretty much the same thing. You have to look at the value proposition of what it is that our funds bring to these entrepreneurs versus any competing fund, all right? And we think we stand pretty strong on partnership. We are very engaged investors. So we see ourselves as partners with these entrepreneurs, with these portfolio companies, just as you do. And the notion of we can really be helpful, and similarly helpful with corporate partners. And the notion is we've run businesses before. We've started them from scratch. We know how to do that, and we can be very helpful. And that's what we want to do. My partner, Jim, he is just not interested to invest in a business unless we can add value, unless we can be on the team and add value. He's just said, life's too short. That's the mantra.
All right, life too short. I have one more question for both of you. What's an investment that you passed on that you wish you didn't?
Passed on.
That you didn't invest in, and you were like, oof, should have invested in that one.
I don't know. I just looked at Vitalize, raised some $50 million recently, and I know I should have invested in that a while ago, but sure we can find lots of examples of that.
There's a pretty large fund that has an unportfolio that they announce every year, and it's all the opportunities that they missed out on and kind of like why they passed on it. And so every fund I think has those. Early on at my time at Newark Venture Partners, there was actually a New Jersey-based company that was very early. They were leveraging VR and selling it in an enterprise setting. And we weren't sure that we could get there on the VR piece. And this was back in 2017, maybe. And they've gone on to raise, I think, probably a Series C now. And so that's one where, we're like, oh, New Jersey-based company, we could have supported that one. But there's lots of fish in the sea. That was definitely one that we missed, but there's more opportunities.
All right, everyone, thank you so much. Mark, Joanne.
Thank you.